FHA home loans are the best choice if your goal is to purchase a new house. These loans are named after the Federal Housing Administration agency that insures them. In 1934, the Federal Housing Administration, FHA, was established in order to provide renters in the United States with better loan options when buying a house. Back then, you needed to have a minimum of 50% down payment and sufficient income to pay off the loan within 3 to 5 years. Specifically, FHA loans are designed to help lower and middle-income homebuyers who don't have enough saved for a down payment. FHA loans come in 15-year and 30-year terms with fixed interest rates. The Federal Housing Administration allows you to get the loan for down payment as low as 3.5%. It also has lower credit requirements than conventional home loans, which we'll explain in detail later in this video. FHA loans not only can help you purchase a home, but there are other types of FHA loans that will help you to refinance or renovate your existing home. To apply for this FHA loan, you still need to apply with traditional financial institutions like banks and credit unions as they handle the loans. FHA loans are federally protected, so they protect the lender in case of default. Lenders are able to offer you FHA loans with lower down payments, even if you have poor credit or limited income due to this reduced risk. Each year, the FHA updates its loan limits based on home price movement. There's a maximum limit to what you can borrow for an FHA loan, and how much you can borrow depends on the county in which your potential home is located. For example, the maximum you could get in 2022 for a single-family home in most of the country is $420,680, up from $356,362 in 2021. And, for high-cost areas, the ceiling is $970,800, up from $822,375 in 2021. FHA loans are popular with first-time homebuyers because FHA loans are part of a federally funded program to encourage homeownership. They are not available to investors or individuals purchasing a second home, in addition to their primary residence. Any home that is purchased with an FHA loan must usually be the borrower's primary residence. So let's take a look at the FHA loan requirements. Number 1 is the down payments and credit score. Your down payment is a percentage of the purchase price of a home, and is the upfront amount you put down for that home. The minimum down payment you're able to make on an FHA loan is directly linked to your credit score. Your credit score is a number ranging from 300 to 850 that's used to indicate your creditworthiness. An FHA loan requires a minimum 3.5% down payment for credit scores of 580 and higher. If you can make a 10% down payment, your credit score can be in the 500 to 579 range. Number 2 is to have verifiable employment history for the last 2 years. Number 3 is to have verifiable income through pay stubs, federal tax returns, and bank statements. Number 4 is to use the loan to finance a primary residence. You must live in a 1 to 4 unit home as your primary residence for at least a year after buying it. One added benefit of FHA loans: you can purchase a multifamily home with a 3.5% down payment and use the rental income to pay for your mortgage. Number 5 is to have a front-end debt ratio, which is your monthly mortgage payment shouldn't be more than 31% of gross monthly income. Number 6 is to have a back-end debt ratio in which your mortgage plus all monthly debt payments shouldn't be more than 43% of gross monthly income. However, some lenders could allow a ratio of up to 50% in some cases. Number 7 is to wait for 1 to 2 years before applying for the loan after bankruptcy, or 3 years after a foreclosure. Number 8, you shouldn't be behind on government-backed loans including federal student loans, Small Business Administration, U.S. Department of Veterans Affairs, U.S. Department of Agriculture. If you've paid your debt in full or you're under a repayment plan approved by the agency that you owe, you may be eligible to apply for an FHA loan. Otherwise, you'll have to wait at least 3 years after the federal government pays your lender's insurance claim. Number 9 is to get an FHA appraisal, which is a requirement for the home that you want to buy to meet the safety and living conditions determined by the U.S. Department of Housing and Urban Development. As part of the FHA loan application process, the mortgage lender will order a home appraisal from an FHA-approved professional appraiser. The hired appraiser will look at the property inside and out. Their report will state the property's value, include photos, and clearly mark whether the home meets the general acceptability criteria, which is set by the U.S. Department of Housing and Urban Development. If the property doesn't meet the criteria, the appraiser will advise specific repairs. Both you and the lender will receive a copy of the FHA appraisal. The report is valid for 120 days with a possible 30-day extension. After the time period expires, you'll need a new FHA appraisal if your loan hasn't closed yet. It's up to the lender to approve, conditionally approve, or reject the property once they receive the FHA appraisal report. Number 10 is borrowers must pay FHA mortgage insurance, which is designed to protect the lender from a loss if the borrower defaults. Mortgage insurance is required on most loans when borrowers put a down payment that is less than 20%. All FHA loans require the borrower to pay 2 mortgage insurance premiums. One is the upfront mortgage insurance premium, which is 1.75% of the loan amount, and be paid when the borrower gets the loan. 2 is the annual mortgage insurance premium, which is 0.45% to 1.05%, depending on the loan term, the loan amount, and the initial loan-to-value ratio. This premium amount is divided by 12 and paid monthly. So, if you borrow $150,000, your upfront mortgage insurance premium would be $2,625, and your annual premium would range from $675, $56.25 per month, to $1,575, $131.25 per month, depending on the term. FHA mortgage insurance premiums will be cancelled after 11 years for most borrowers if they financed 90% or less of the property's value. Now, how to apply for FHA loan. The first step to getting an FHA home loan is finding an FHA-approved lender. The good news is that the majority of banks and mortgage companies offer this type of mortgage, so finding a lender shouldn't be too difficult. You can get FHA financing from banks, mortgage brokers, credit unions, and online lenders. The right lender for you will depend on a few things. For instance, if you have a lower credit score, you want to make sure your lender accepts FHA's minimum of 580. Some lenders set the bar at 600 or higher. You should also think about how you want to work with your lender. Do you prefer person-to-person interactions? Look for a local lender that focuses on in-person and over-the-phone lending. On the other hand, there are a wide variety of lenders that will let you complete most or all of the mortgage process online. After finding a lender, the next step is to submit a loan application. Many lenders let you apply online, though some will connect you with a loan officer to complete your application over the phone or via email. Since mortgage terms and rates can vary from one lender to the next, you should contact multiple lenders to compare offers. This helps you find the best deal. Ideally, you should request quotes from 3 to 5 lenders so you know you're getting the best interest rate and lowest fees available to you. Don't worry that much about those inquiries affecting your credit score. As long as you submit all your mortgage loan applications within a 45-day window, they'll be reported as a single credit inquiry on your credit report, so your score won't be dinged multiple times. I hope this video gave you a basic understanding of the FHA loans. If you like this video, please hit the like button and subscribe for more finance videos. Thank you for watching.